Hello. Today we're looking at the Stewart Investors Asia Pacific Leaders Sustainability Fund, and I'm delighted that David Gait, the lead manager of the fund, has joined me. Hello, David.
Hello.
So it's a bit of a mouthful, the name. There's a lot of information in there. Let's start with the regional aspect, Asia Pacific, excluding Japan. Just describe the region you invest in.
Yeah, the fund's designed to give investors exposure to the Asia Pacific ex-Japan region. So that excludes Japan and includes Australia and New Zealand.
Okay, and looking at that region now, clearly, Asia was first in, first out of the pandemic. Does now feel like a good time to be investing in Asia, or do you tend to look longer term than that?
So we tend to look longer term. We believe the region has huge potential, huge growth opportunities, very robust economies, huge catch-up potential. You look at the average income per capita of somebody living in the States, for example, it's about $60,000. In Indonesia or India, it's less than $2,000. And so, there's a lot of growth to come over the next decade or two. The real attraction, though, of the region is not just that, but the number of wonderful companies that are sitting in it that are well placed to take advantage of that. So it's a combination of the companies plus the growth potential of the region that they're in.
Yeah. Okay. So let's go back to the companies then, and part of the title is leaders. Does that mean that you're focused mainly on the biggest companies in the region?
No, the fund provides exposure to mid-cap companies and larger companies, but just not very small companies. And the reason for that is simply liquidity. We're very aware of being entrusted with people's money and ensuring we've got the ability to hand it back to them whenever they would like it. So the smallest company in the fund, I think, is about $3 or $4 billion of market cap, and the largest one is over 500 billion. So there is a real range in there from smaller companies to big companies, but none of the micro companies.
Okay. Now, so the final word that in the name of the fund that we haven't addressed is sustainability. Now, clearly that's a sort of vogue word at the moment, but I think, you guys have been investing this way for many years now, haven't you? And you have an expression, you talk about social usefulness. Can you just talk to us what you mean by that?
Yes, so our oldest Asia Sustainability Fund, the all-cap version, so the one with the very small companies as well, dates back to 2005, so over 15 years now. And the reason we were so keen to focus on sustainable investment in Asia is because we feel it's the key to delivering long-term returns and reducing risk when investing in the region. And the reason for that is, for a very long time, it's been clear that countries like India, China, Indonesia in particular, the big Asian countries, are not going to be able to follow the same development path we have in the UK or Australia. Put crudely, if everybody in India lived the way we do, you'd need at least 3 planets, and we don't have that. So that throws up a lot of headwinds for companies that are poorly positioned for the sustainability challenges that the region is facing, but also a lot of tailwinds for companies that are well positioned to deliver progress in terms of sustainability, whether that's in more obvious areas like energy efficiency or carbon reduction, or perhaps sort of broader areas of sustainable development around healthcare, educational levels, poverty alleviation, inequality, and so on. So we're looking for companies that have those tailwinds and trying to avoid the ones that have the headwinds.
Okay, so sustainability is obviously a key factor and one of the things that you focus on. What are the other things that you're looking for? What makes a good company in your view?
So it's no good just going and finding a wind company or an electric vehicle company. They still need to meet our quality criteria. We could lose a lot of money very quickly just buying sort of green companies in the region. So in particular, we look for quality of management. That's absolutely essential. We view our job as being entrusted with clients' money, and we entrust it to companies in the region for at least sort of 6-7 years on average. And so we have to trust the management teams and the owners of those businesses. So most of our job is spent building up a picture of the quality, overall quality of a management team. Quality of the business obviously is important. We don't just want businesses that are going to thrive or do well for 3 months. We're looking for the long term. We want to know what happens when things go wrong. And the quality of financials. We have a strong preference for net cash companies. Things often go wrong in Asia, and the companies that come out stronger the other side are the ones, that have the financial resources.
So the way that you describe the fund, it seems to me that it has both long-term growth characteristics, but also some defensive qualities as well. Given that, I wonder what sort of market conditions you would thrive in. What would you do well in, and what would you do less well in?
Yeah, so we set out to thrive in the long run. That's our proposition. There are certain markets we do tend to underperform, and when markets really run away very, very quickly, become very momentum driven, fundamentals are less important, for example. We don't chase poor quality companies. The flip side is when things do go wrong, and Asia being Asia, from time to time things happen. After all, it's home to 3 of the world's most dangerous political borders. So when things do go wrong, we hold on to a lot more of those returns, and on average, and are better positioned to deliver those long-term returns as a result. We feel we're not risk averse. We don't believe risk averse about investing works, but we're risk aware. So that's about being obsessed with what can go wrong as well as what can go right.
And it's a very diverse region. Obviously, it's a big region, very diverse region. Where in Asia Pacific are you finding the best opportunities at the moment?
We feel we're very spoiled to have the ability to invest, particularly in India and China. There's a huge number of new companies coming through. Some of them aren't so good quality, but a lot of them are, with huge potential. So, for example, we've invested in 2 new Chinese companies in the last 12 months. Both of them only have a 1% market share at the moment, but they're the leaders in their markets, very unconsolidated markets. And, it seems reasonable to expect they could grow 20-25% a year for some time to come. So China and India would be the 2 biggest areas that we're generating ideas at the moment.
David, thanks very much for lifting the lid and giving us an insight into your fund. And thank you all for watching. Goodbye.